Welcome to Open Enrollment 2023. My name is Tara Mendez, HR Generalist at Horizon Beverage. Making your benefit elections is an important undertaking, and we understand that not everyone is able to attend enrollment meetings. So we have created this presentation to communicate about our benefit plans and to help employees and their families make decisions about their enrollments. Open enrollment is your one chance during the plan year to make changes to your benefits, aside from experiencing a qualifying life event. A qualifying life event would include marriage, birth of a child, or a loss in benefit coverage from another plan. In order to get coverage after a qualifying event, you must notify Horizon's HR department within 30 days of the event. Our benefit plan year runs from April 2023 to March 2024. Our coverage for Harvard Pilgrim is remaining the same with a 4% premium increase, and we will continue to offer the HMO deductible and PPO deductible plans. Our dental coverage is remaining with Guardian with no coverage changes and an 11% premium increase. First, we will review Harvard's HMO deductible plan. With the HMO plan, both the employee and Horizon contribute towards paying the deductible. For the new plan year, the deductibles are remaining at $2,000 for an individual and $4,000 for the employee plus one and family plans. Office visit copays are remaining at $25 and specialist visits are remaining at $40. Preventative visits, such as annual physicals, will continue to be covered at 100% with no copay. The prescription copays are also staying the same. And as a reminder, with any HMO plan, each member is required to have a primary care physician or PCP. This doctor coordinates all non-emergency care and services and provides referrals to specialists and other services. The employee responsibility towards the deductible will also remain the same this plan year. An employee electing the individual plan will be responsible for the first $500 in deductible-related expenses during the plan year, and Horizon will be responsible for the remaining $1,500. For employee plus one plans, plan participants will be responsible for the first $750 in deductible expenses, with Horizon paying the remaining $3,250. And for a family plan, participants are responsible for the first $1,000, with Horizon paying the remaining $3,000. Please note that the maximum out-of-pocket deductible is $500 per person, so even on employee plus one and family plans, no one person on your plan can have more than $500 in out-of-pocket deductible expenses during the plan year. Although you will continue to receive invoices from providers for expenses above your deductible levels of $500, $750, or $1,000, you will be responsible for paying those expenses, and Horizon will reimburse you up to the deductible maximums of $2,000 or $4,000. Once those deductible maximums are reached, Harvard Pilgrim will be responsible for all charges. The PPO deductible plan also remains unchanged this year with a $2,000 individual deductible and a $4,000 deductible for employee plus one and family plans. Office visit copays are also $25 and $40 for specialists. Prescription drug copays are also staying the same. The major differences between a PPO and HMO plan are that PPO subscribers are not required to get referrals from their PCP to see specialists, and the subscriber is responsible for paying the full deductible, either $2,000 or $4,000. Horizon does not pay any portion of this plan's deductible. The non-union employee costs for health insurance per pay period are as follows. For the HMO, an individual plan is $34.50, employee plus one is $69, and a family plan is $99.70. For the PPO, an individual is $20.77, employee plus one is $41.54, and family plan is $59.99. Next, let's review benefit strategies. Benefit Strategies is now a part of Voya, so their website has been rebranded, and you will see communications through mail and email from Voya. Voya is the administrator of deductible reimbursements for those enrolled in the HMO plan, and they also administer our flexible spending accounts. The flexible spending accounts, or FSAs, allow you to set aside pre-tax dollars to use for certain eligible expenses. There are two types of FSAs. One is a healthcare spending account, which allows employees to contribute up to $3,050 for the plan year. This account does require a minimum contribution of $260 per year or $5 per pay period. These funds can be used to pay for out-of-pocket medical expenses, such as copays, prescription costs, dental costs, as well as certain over-the-counter items. The benefit here is that you are reimbursing yourself with pre-tax dollars. Next, we have dependent care accounts. These allow employees to contribute up to $5,000 for the plan year. Again, there is a minimum contribution requirement of $260 for the year. These funds can be used to pay for dependent care expenses such as daycare and/or elder care expenses. Please note that this account is not pre-funded, which means you can only use the money that is in the account. You do not have immediate access to your full annual election like you do with a healthcare FSA. The plan year for the FSA accounts is also April to March, and per the IRS, these accounts do have a use it or lose it rule. If you do not use all of the money in the account by the end of the plan year, you forfeit the remaining balance. We do give a 2.5-month grace period at the end of the plan year to finish up spending. For the new plan year, we are remaining with Guardian Dental. Under Guardian, all coverages are remaining the same. The calendar year maximum benefit is remaining at $1,750 per person. Orthodontia has a separate lifetime maximum benefit, and the first $1,500 is covered at 100%. Guardian covers the following services. Type A or preventative services are covered at 100%. These services include oral exams, cleanings, and fluoride treatments. Type B or basic services like fillings, extractions, and root canals are covered at 80%, and Type C or major services such as crowns, bridges, and dentures are covered at 50%. For Type B and Type C services, there will continue to be a $25 deductible for the individual plan and a $75 deductible for the family plan. There is an 11% premium increase effective April 1st. The new cost per pay period for an individual plan is $2.13, and for a family plan, it is $6.15. Also, if you have not already done so, you can create an online account with Guardian at guardiananytime.com. Next, we're going to review the long-term disability tax choice option. Long-term disability insurance, or LTD, is 100% paid by Horizon. There is a 90-day wait period, and coverage provides payment of 60% of wages, paid monthly, capping at $6,000 per month. Because Horizon pays for this coverage, the benefit you receive while on LTD is taxed before you receive it. So with the long-term disability plan, we offer a tax choice option. Electing the tax choice option allows you to pay the tax on the weekly LTD premium that Horizon pays, allowing any future LTD benefits to be received tax-free. If you decline the tax choice option, any future LTD benefits will be taxed before receipt. As an example, let's say you earn $4,000 per month. Your LTD benefit would be $2,400 before taxes. For simplicity, let's say you're taxed at 25%, which is $600. This means that your actual take-home monthly LTD benefit would be $1,800. Let's say it costs Horizon $4 per week to provide you with LTD coverage. If you elected to pay the tax on that $4 per week, you would be able to get that full $2,400 benefit untaxed. For the tax choice option this year, your current election will stay in place unless you notify Human Resources that you would like to change it. If making a change to your current LTD election, please ask Human Resources for the tax choice form. VSP is one of the largest national vision care companies, offering a large network of independent eye care professionals. Under VSP, you are eligible for an annual routine eye exam with a $10 copay. an annual contact lens fitting with a maximum copay of $60, and you will be provided with a $130 allowance, which can be used towards glasses every 24 months or contact lenses every 12 months. The cost for VSP is remaining the same. It is $1.52 per week for an individual plan and $3.27 per week for a family plan. Open enrollment will again be completed through the ADP self-service portal. All employees are required to complete open enrollment. Even if you are not making any changes to your current benefits, or if you are completely waiving coverage, you still need to complete open enrollment through ADP. All of your current benefit elections besides your flexible spending accounts will be saved in the system. The flexible spending accounts do require re-election each year with a new annual dollar amount. You will also be able to review and update your life insurance beneficiary information during this enrollment. More detailed instructions on how to complete the entire ADP enrollment process are available on Filer. All enrollments have to be completed by Friday, February 24th. Before finishing up, we would like to review some of our additional benefit plans. Back in November, we officially moved over to the new Empower website for our 401k accounts. If you have not already done so, you can register your account at www.empowermyretirement.com. As a reminder, you are able to update beneficiary information for your 401k directly through your online account. We recommend logging into your Empower online account and reviewing or updating this information regularly. We would also like to remind everyone about the annual fitness reimbursement benefit that Harvard Pilgrim offers to its members. The benefit is $150 per person, and up to 2 people per plan can apply for a maximum $300 reimbursement. To qualify for reimbursement, you must both belong to the facility and be a Harvard Pilgrim member for 4 consecutive months. Reimbursement applications can be submitted online through your Harvard Pilgrim account or sent in through the mail. Applications for the 2022 calendar year are due by March 31st. We also want to remind everyone of the Identity Theft Protection Plan that we offer through Identity Force. Identity Force provides ongoing credit and identity monitoring for employees and their family members. Some of their services include monitoring credit reports, credit scores, address changes, loan requests, as well as providing recovery services to help protect against ID theft. There are 3 plan coverage levels to choose from, and you have the option of adding eligible dependents. A more detailed description of the coverage levels is available on Filer. You will see this as an enrollment option when you are completing enrollment through ADP. If you have any questions, please contact me at tmendez@horizonbeverage.com or at extension 4278.